Hey guys, what's up? This is Francisco with Valorizo Capital, and today we're going to do the market update video. We're going to go through the major indexes. We're also going to take a look at the UVXY, and then we're going to take a look at other ETFs that I think that are important for us to understand what is happening on those sectors and what is actually the effect on those sectors in the market as an overall. So first of all, remember that this is for informational purposes only, and that everything in the video is based on my personal opinion and is not financial advice. Now, first, I have the Nasdaq Composite in my screen right here. Let me get my drawing tools. Here I have the Nasdaq Composite in my screen. This is TradingView. For anyone who's new to the channel, I use two main indicators. I actually have three indicators, but two main ones. The first one right here is the trend oscillator developed by Sam Shames. This is an indicator that helps me identify the trend based in momentum by using an EMA and then using the structure of that momentum to identify potential breakouts. And then the indicator that I have, my second indicator that I use is the TTM squeeze. This is the Squeeze Pro developed by John Carter. This indicator basically helps me identify moments in time when there's a contraction in volatility of a certain product. That way I can identify moments in time when the Kellner channels would measure the average true range of the price is trading inside the Bollinger Bands are trading inside those Kellner channels. And when we have those moments in time, we usually see a pretty substantial expansion in price. And then the one that I have in the bottom, this indicator just basically helps me identify the moments when we have a negative crossover of the exponential moving averages in my screen. When I have the red dots that you can see here, when I have this red dot, that means that the 8 exponential is below the 13 exponential, and that 13 exponential is below the 21 exponential. That means that the trend based on the moving averages, the exponential moving averages, is to the downside. So that's basically just another confirmation for me to understand that the trend is bearish in this case because we have red dots on it. So now that we understand that, the other thing that I use, I do have a sell signal right here. When you see lines in my charts, when I have a red line, that means that I have an active sell signal, and it will say the date that sell signal trigger. And if you see a green line, that will mean that I have an active buy signal in my charts. So now that we understand that, let's talk about the EMAs that I have in my chart. I have the 50 daily, which is the purple one, and then I have the 21, which is the blue one, and then I have the 8 exponential, which is the yellow one, and then of course I have the 200 DMA, which is the simple moving average, which is the pink one in my screen. The lines that you see here are basically lines for me to identify the gaps that we have open, and then these lines that you see the orange lines and the green lines are basically lines that help me identify important pivots in price. That way I can know where we have substantial supply and demand levels based on market structure. So back to the chart, here we have the Nasdaq Composite, which is the ISIC in TradingView. And I have an active sell signal, right? You can see that the trend is bearish at this moment. You can see that we are holding those June lows. We haven't break those in the Nasdaq Composite. In the SPY, as we're gonna take a look at, we already broke those in the Dow Jones. We already broke those, and I think also in the QQQ, but we're also gonna take a look at. So yeah, basically we had a pretty strong move to the upside. We have a pretty strong move to the upside right here. Let me just erase that for a second. You can see that we had a squeeze. We had a pretty strong expansion to the upside, and now we basically gave all of that back. And when we gave all of that back, you can see that now we're testing those June lows, but we're trading below a declining 8 exponential, a declining 21 exponential, and we're also trading below a declining 50 daily moving average. So basically, as you can see here, right here, we tried to went above that 50 daily moving average. Then we got the CPI. Price got slammed back to the downside, and we're trading rapidly. We're trading rapidly below this 8 exponential moving average that you can see right here. So I don't think that there's any reason to be bullish, to be honest. unless we see some changes in the Fed policy. I think that will be the only thing that could cause any changes in the market. And until we don't see that, we just have to follow the trend, and the trend is to the downside. I do think that we are oversold, and we're going to talk about it. Let's take a look at the put call ratio pretty quickly. You can see right here the put call ratio. The line that I have here, this purple line, is the 10-day moving average, and usually when that 10-day moving average gets somewhere around 1, that means that we're super oversold. And we can see that some other instances right here when we were oversold. And then we have a pretty strong move to the upside, and now we're hitting those levels again, right? You can see that there's a lot of bearish sentiment in the market. You can see that 10-day moving average is way above 1. However, we are not seeing any kind of a rally as of now. So I think we might be on the instance that we might see some capitulation in the market. But for us to see that capitulation, we're probably going to see some acceleration to the downside. So we have to be open to the idea that we might see some very intense selling that is going to be, it's going to look irrational. But when you start looking at bear markets that we saw in the past, usually the third leg down happens fast, and it happens in a very extreme fashion. So you have to be ready for that. For anyone who hasn't seen those charts, I recommend that you go back all the way back to 2008 when we had that actual bear market, and you can see that the last months of the selling there were pretty extreme. And even though the bearish sentiment was pretty high and the market was clearly oversold, the market still continued to go down. So we have to be open for that kind of circumstances. And then also, if we take a look at this chart is basically the chart for the yields in the market, and you can see that these yields continue to rise, right? We are somewhere around 9.5 right now, and as long as this is rising, you have to understand what is actually what moves the market, and what actually moves the market is the Fed. So there is this famous saying that it says don't fight the Fed, and it's actually pretty true, because when you actually look at this chart and then you start going all the way back to the previous history in the market, you can see that the market really goes up when the Fed is lowering interest rates. That means that we're seeing more money into the market. They're lowering interest rates, and that means that equities become attractive to investors. And we are not at that cycle right now. You can see that we're breaking above 9. Are we gonna see some kind of pretty extensive move to the upside, and then that's going to be the peak in interest rates? We're probably going to see that. It always happens. If you go back in history, you're going to see that always happens at some point. But remember, there's another saying that says that the market remains irrational more than you can remain solvent. And that's actually pretty strong, and there's a lot of wisdom in that quote. So we have to understand that the market that we're dealing with right now is a market in which interest rates are going higher. And as long as that continues to be the picture, you cannot expect to see a bottom. It's that simple. It's actually that simple. I do have an indicator. I also use the Trend Pro Oscillator for watching the movement in the yields. And I'm starting to see some divergences, meaning that the yields are going higher, but the momentum actually is starting to go lower. Now, this can last for a while, right? This doesn't mean that this is going to stop right now. This can last for months. I don't know if even years, but until this changes and the trend oscillator starts to trend lower, as we saw right here when the market had a pretty strong rally, we have to be really cautious on the buy side. We're going to continue to see pretty strong short covering rallies, but until this chart changes right here, and these interest rates start to go down, we're probably not going to see a rally in the markets anytime soon. So we have to understand the machine, as Matt Caruso, who is a very successful trader and who has actually a video under explaining what the Fed actually does. Until we don't see any change on the Fed policy, we're not going to see a bottom to this market. So just be aware of that. Let the market, let the Fed actually guides, be be really connected with what is happening with the Fed and what's happening with the economy right now, so that you keep yourself on the right side of action. So that's going to be pretty important. So now that you understand basically the entire picture, I think that we have to be open to the idea that the Nasdaq composite that I have right here, the Nasdaq composite might just be flagging here, right? So the Nasdaq composite might just be flagging here. Let me just get my tools. There we go. You can see that the Nasdaq composite might just be flagging before breaking to the downside. So we have to be really aware of that. Now, I'm expecting some kind of bounce. I would love to see a bounce somewhere around the supply level of 11,316. And if we happen to have that kind of bounce, basically it's going to be coming into a decline in 21. And I think that's going to be the opportunity to build more short positions and continue to play this to the downside. So that's the level that I'm going to give you for the Nasdaq composite. And then I don't think we need to look at many charts. I think that let's just take a quick look at the SPY, and then I'm also going to go through some big tech names like Apple and Tesla, so that we can also understand what is going to be the implication of those tech stocks in the market as well. So here I have the SPY. And you can see basically the same thing, right? The SPY is actually breaking below those June lows. You can see that the momentum might have an active sell signal. You can see that the momentum is trending below, right? It's making lower highs and is making lower lows. And as long as momentum is doing that, we should expect price to do the same, because as I always say in this channel, momentum changes the structure before price. And as long as momentum is not changing the structure, there's a low probability that price is going to change the structure. So let's just be aware of that. I think that I'm going to be waiting for the same thing. Perhaps we're going to see some kind of rally. This 21 is going to catch up with price, and then we're going to see a continuation to the downside. You can see that the momentum is negative. The momentum is decreasing. That means that it favors more selling. And you can see that the structure of the moving averages is also bearish. So we should expect more downside, or at least the easy trade is just wait for a bounce and then short that bounce. Is actually that easy to look at. So that's going to be the SPY. That's going to be the Nasdaq composite. Let's take a look at the UVXY, because I also think that is a very important chart, and this is a very bullish chart right here, right? You can see that the UVXY was actually the UVXY was actually being accumulated in this move to the downside that it had. You can see right now this is a very bullish scenario for the UVXY. You can see that we broke above this 50, right? You can see the declining 50 daily moving average. You can see that price broke above it. You can see that momentum is making higher highs and is making higher lows. That means that momentum is trending, therefore price is also trending, right? So unless we start to see some really divergences in momentum, and we start to see momentum breaking below this 49.56 level, I don't think we're gonna see any change in the structure of price. So we also have a squeeze that is starting to fire to the long side. We can also see that the EMAs are stacked positively. That means that the structure based on the moving average is also positive, meaning is bullish rather than positive, is bullish. So I think that the best way to play the UVX right now, if we happen to get a pullback, right, that means if we happen to have an oversold rally in the markets, which I don't think is going to be pretty extensive, right? I think it's just going to be a rally that is going to take us to a decline in 21 and then get rejected. I'm expecting the same thing for the UVXY. Of course, it could fail, but that's good. That's kind of the plan that I have for next week. Can we get a pullback in the UVXY to this 11.21 level, which is going to act as demand? And then can we get a pullback into that rising 21 exponential and then another leg to the upside? That's kind of what I'm seeing here in the UVXY, and that falls really good with what we're seeing in the Nasdaq composite. So for the Nasdaq composite, we're waiting for a rally to short, and then in the UVXY, we're waiting for a pullback to buy and get involved into the long side. So I think those charts are basically telling the story. And then another chart, another two charts that I think that are telling the story is going to be Apple and Tesla. And here we have Apple. You can see that I have an active sell signal from August 23rd. And I think Apple looks beautiful for the downside, right? It looks beautiful for more downside. You can see that we have a squeeze. that is starting to fire to the downside, we have negatively stacked moving averages. That means that the structure based on the moving averages is also negative. You can see that the structure in price is also bearish because we're trading below this 148.37. And you can see right here on momentum that we're making lower highs and we're making lower lows, right? So the structure in momentum is negative, the structure in price is bearish, the structure in the squeeze is bearish, and the structure in moving averages is bearish. So what's the easy trade, right? The easy trade is if we happen to get a rally in Apple all the way back to 148.37 and this 21 starts to catch up with price, I think we're gonna see some continuation and a retest of these lows. And given that Apple is one of the highest weighted one of the highest weighted stocks in the market, we're probably going to see some more downside in the SPY, in the QQQ, in XLK, and therefore in the Nasdaq Composite, right? So keep this chart in mind. If Apple continues to look like this, it's not the being bullish is not the highest probability situation here. For us to be bullish, we will need Apple to basically rally all the way above 148, retest 148, and then rally to the upside. That's going to be a change in the structure in price, and you need that to happen for us to be bullish in this market. It's just how it works. So just look at price, because price is telling the story. And then finally, let's take a look at Tesla, which is actually doing something pretty similar, right? You can see right here that the squeeze is pointing lower. We don't currently have a squeeze, but we have a squeeze that is pointing lower. And then we also have, you can see here that we have negatively, we have the moving averages, the structure in the moving averages is also negative. And you can see that the structure in price is also negative because we're trading below 290.40. And as long as we're trading below 290.40, then the path of least resistance is to the downside. Is really that simple. We just have to keep it pretty simple. And then you can see here that we got rejected at the 50 daily moving average. So you can see that the 50 daily moving average was support. Now the 50 is acting as resistance. We got rejected, and you can see that the momentum is making lower highs and is making lower lows, right? So if we happen to see any rally into this declining 21 exponential moving average, I think that's going to be a beautiful opportunity to short. Maybe after earnings, we see some kind of different price action, but I think that the easy trade right now in Tesla is just to short it. Therefore, if Tesla is a short opportunity, given that it's also a very high weighted stock in the market, then probably we're also going to see more selling in the market. We just have to keep it really simple. And maybe let me share just with you another stock, because a lot of people are talking about this one, meaning saying that this is the FSLR First Solar. A lot of people are talking about this stock being one of the leaders and left in the market, and a lot of people are watching this stock. And yes, it's holding pretty well. It's holding above that 21 exponential moving average, but you can see that we have a squeeze that is starting to turn negative, right? We have a squeeze that is starting to turn negative. You can see that we have a negative, that we have a bearish divergence in the momentum, meaning that price was continuing to going higher, but the momentum was going lower. And you can see that I'm also seeing that on my momentum trend oscillator. You can see that price was basically going sideways, but the momentum was already going to the downside. Now price hasn't broke yet, but the momentum already broke a long time ago. Momentum is trading below support, and if momentum happens to go to support that is now going to be resistance and gets rejected, I think that we're going to see a pretty nice sell-off here in First Solar, at least to that 50 daily moving average. And if First Solar happens to break that 50 daily moving average, I think it's going to be a big tell that there are actually not many leaders in the market, right? Or leading stocks that some people want to call them. So I think that you just keep things pretty simple. The Nasdaq Composite is trading near the lows, and it's not trading near the lows in a way that I will expect a really powerful bounce. I'm expecting a bounce, some kind of bounce, but I think it's going to be a shortable bounce. And then looking at the yields, basically the yields are continuing to go higher. We have a lot of bearish sentiment, that's true, but remember that sentiment is just a sentiment indicator. And when you start taking decisions based just on sentiment, that's usually not the path to go. The path to go is just to follow price. And price now is bearish. So the summary and expectation for next week is more downside. I'm expecting a bounce. I'm expecting some kind of bounce. I'm thinking that we might see a bounce on Monday, probably on Tuesday as well, but then we're probably gonna see a pretty strong reversal in the coming days of the week. The only thing that will change this story is if we actually see some kind of pivot in the Fed, meaning that we see some kind of changes in the policy, and we're not seeing that yet. So thank you so much, guys, for watching this video. I'm pretty sure that this is going to be really, really helpful so that you can add it to your own analysis. Let me know in the comments if you have some different ideas. But this is what I'm seeing in the market, and I think that we just follow the path of this resistance. So thank you so much, guys, for watching. Remember to like and subscribe, and also take a look at my Twitter account, which is @Valareso Capital. In that Twitter account, I usually post more videos and more analysis on a daily basis. So thank you and peace. Bye bye.